You walk into a Dollar Tree expecting rock bottom prices, but you leave spending $15 on items that once cost just $1. Even as prices creep up, this chain rakes in nearly $18 billion a year, generating billion-dollar profits on margins thinner than most competitors could survive. How does a store selling $1.25 shampoo and $3 frozen pizzas outperform retailers charging triple the price? The secret is buried deep in Dollar Tree's balance sheet, and in the subtle ways each cost is squeezed before the first price tag is set. To understand how the math really works, we need to start long before the shelves get stocked. Dollar Tree's real estate math starts with sheer scale. With 9,269 stores open as of the third quarter of 2025, each location follows a simple formula. A box of about 8,000 to 10,000 square feet tucked into a strip mall or a busy side street, not the glitzy main drag. The company signs 10-year double net leases, which means it covers taxes and insurance, but not major repairs. That trade-off keeps base rent low, often falling between $9 and $13 per square foot. Compare that to specialty retailers in prime locations, where rents can run $30, $40, even $50 a foot. For Dollar Tree, the difference is everything. A typical store might pay just over $100,000 a year in base rent, while a similar-sized shop in a premium mall could pay 3 or 4 times as much. Multiply that savings across thousands of stores, and the impact on profit becomes clear. Landlords eager to fill vacancies in secondary shopping centers often accept these lower rents in exchange for a national tenant with a reputation for steady traffic. Dollar Tree's bargaining power, built on its vast footprint, lets it negotiate hard, sometimes trading tenant improvement allowances for a better rent deal. The result is occupancy costs that are a fraction of what many retailers face, and a fixed expense line that stays predictable for years. That low rent per square foot is the first pillar supporting Dollar Tree's razor-thin but resilient margin structure. A Dollar Tree shopper rarely finds themselves in a gleaming shopping palace. Instead, most stores sit in the kind of strip mall you pass a dozen times a week, wedged between a laundromat and a nail salon, set back from the main road, with a faded sign and plenty of parking. These locations are not accidental. While premium apparel brands shell out $30, $40, even $50 per square foot for a spot in a top-tier mall, Dollar Tree rent usually lands in the $9 to $13 per square foot range. That difference is not just a line item, it is a cornerstone of the business. Landlords with empty storefronts in secondary shopping corridors see Dollar Tree as a steady draw. It is a national chain with a reputation for reliable foot traffic, and it is willing to sign a 10-year lease. In return, Dollar Tree locks in rents that are a fraction of what other retailers pay. Multiply that discount across more than 9,000 stores, and the savings pile up fast. This scale gives the company real leverage when negotiating with landlords. But low rent alone is not enough. The company has a smaller store footprint, about 8,000 to 10,000 square feet, which means every square foot has to work. Dollar Tree drives impressive sales density, often pulling in $160 to $200 per square foot annually. That keeps the occupancy cost ratio healthy, even as prices stay low. It is a quiet form of leverage, bargain rent, strong sales per square foot, and predictable costs that give Dollar Tree breathing room where others might struggle. With the fixed cost foundation set, the next challenge lies in how they fill those shelves so cheaply. A single party balloon, a pack of plastic forks, a glittery birthday banner. On Dollar Tree shelves, almost half of these items trace their origin to one place, China. The journey starts in sprawling hubs like Yiwu International Trade Market, where thousands of vendors offer goods for pennies apiece. For Dollar Tree, that means a $1.25 party favor might cost just 20 to 40 cents, even after factoring in shipping and basic import duties. Multiply that across millions of units, and the cost savings are staggering. But the math does not stop with cheap factories. In 2024, United States tariffs on Chinese imports threatened to add $15 to $20 million per month to Dollar Tree's costs. Rather than simply absorbing the hit, the company pressed suppliers for price breaks, tweaked product specifications to fit lower tariff categories, and shifted some orders to Vietnam, India, or Mexico. By the time those tariffs filtered through the system, Dollar Tree had managed to offset more than 90% of the impact, often without customers noticing a thing. Aggressive sourcing comes with its own risks. In fiscal 2024, Dollar Tree booked reserves totaling tens of millions of dollars for potential anti-dumping duties, extra costs that can hit when regulators decide an imported good is being sold too cheaply. Still, the core reality is hard to ignore. By squeezing every cent from its global supplier network, Dollar Tree keeps the shelf prices low and gross margins surprisingly healthy. That relentless focus on cost at the source is the second pillar holding up the entire business model. A semi-truck backs up to the loading dock behind a Dollar Tree, and the pace inside shifts. Pallets of party supplies and cleaning products are rolled straight from the truck, through a narrow back room, and onto the sales floor, often still in their shipping cartons. The entire process is designed for speed and simplicity. With a network of lean distribution centers, Dollar Tree keeps its supply chain focused on volume, not complexity. Most products are shelf-stable, so there is no need for elaborate refrigeration or high-tech tracking systems. Freight costs, once a threat to margins during the pandemic, have eased. In 2024, lower domestic shipping rates helped nudge gross margins higher, giving the company a bit more breathing room. But even a tight operation is not immune to disaster. In April 2024, a tornado tore through Marietta, Oklahoma, destroying a key distribution center and wiping out $117 million in inventory and property. Despite that loss, the rest of the network kept stores stocked and absorbed the blow without major disruption. That resilience comes from a model built on redundancy and scale. On the sales floor, efficiency rules. A typical Dollar Tree runs with just 3 to 5 employees per shift. There is no army of cashiers or customer service desks, just a handful of staff juggling stocking, ringing up purchases, and keeping the aisles clear. This skeleton crew keeps labor costs in check, even as wages and utilities tick upward. In the last quarter of 2024, selling, general, and administrative expenses held at 27.5% of revenue. A tight squeeze but manageable thanks to simple operations and a relentless focus on volume. Every dollar saved in the back room or at the register helps protect the thin margin on each $1.25 sale. A single item on a Dollar Tree receipt tells a bigger story than its price tag. Take a pack of party balloons selling for $1.25. The company might pay just 40 cents to land that item on the shelf, leaving 85 cents as gross profit before overhead. That is a 68% margin at the item level. Not every product is that generous, but the math holds up across the assortment. A $5 multi-price frozen meal, sourced for $2, delivers $3 in gross profit, a 60% margin. These are headline numbers, not the final take-home. Once freight, shrink, and markdowns are baked in, Dollar Tree's average gross margin settles around 36% in a strong quarter, or 35.8% for the full year. Margin pressure comes from higher tariffs, theft, and markdowns, while lower freight and a better mix of multi-price items help lift the average. Before a single dollar goes to rent or wages, that is the slice left from every sale. A single shopper's basket tells only part of the story. Multiply that basket by millions of transactions, and the math transforms. The average ticket, once $5 or $7, now lands closer to $8 or $10, thanks to the rollout of multi-price formats. In 2024 alone, Dollar Tree converted nearly 3,000 stores to this new model, with hundreds more following suit. Even so, about 85% of what is on the shelves still costs $2 or less, keeping the value promise alive. But the real engine is scale. Over 3 million new households walked through Dollar Tree's doors in a single quarter, and most of those newcomers earned more than $100,000 a year. Every slightly larger basket, every new shopper, stacks up. By the end of 2024, Dollar Tree generated $1.5 billion in operating income and nearly $900 million in free cash flow. With the sale of Family Dollar freeing up resources, the company now aims for up to $19.1 billion in sales next year, proving that relentless volume can turn pocket change into a profit powerhouse. Every dollar spent at Dollar Tree fuels a machine built on relentless efficiency and scale. As inflation squeezes budgets and competitors falter, this model only grows stronger. The real question now: how much of retail's future will be built on the promise of small prices multiplied billions of times? Share your take below.